Thank you for joining this TransUnion webinar, The Transformation and Disruption of Super Apps and Digital Wallets. My name is Angie White, Senior Product Marketing Manager at TransUnion, and I'll be your presenter today. This is the third in our series of thought leadership webinars, which give a deeper dive into some of the results from the Economist Intelligence Unit report, New Dimensions of Change, Building Trust in a Digital Consumer Landscape, which was sponsored by TransUnion. So I'm really excited to be able to share with you some of the key findings from our joint report with The Economist, which analyze key trends that are driving digital transformation and how businesses can build trust in the digital consumer landscape. We surveyed over 1,600 executives across 12 countries to gain a better understanding of how businesses around the globe and across a broad range of industries perceive and are adapting to the modern economy. You know, I think this question is especially important in light of the global pandemic, which has really changed a lot of the ways that we do business. In today's session, we're going to dig into global perceptions about super apps and digital wallets and look at how their adoption is changing the digital landscape globally. A big piece of that is how such technologies are disrupting the relationship between businesses and their consumers. We'll also look at some of the ways this is happening and talk about strategies to mitigate. Lastly, we'll dive into the risk associated with the changing digital frontier, such as account takeover, application fraud, and payment fraud. And more importantly, what you can do to prevent and protect your business. All right, so let's go ahead and dive in here. So the ways consumers interact with businesses has been undergoing rapid change over the past decade. Whether that's super apps and digital wallets or simply moving offline activities online, businesses are really having to adapt quickly to changing consumer expectations or risk getting left behind. Two of the fastest growing innovations are digital wallets and super apps, which are driving the need for businesses to adopt tools that will help them optimize digital experiences, protect customer accounts, and be able to build that trust in faceless channels. Before we get too far, let's just pause to level set, ensure everyone knows what super apps are and how they're driving the growth of digital wallets. So super apps are a single digital portal, predominantly accessed via smartphones. With this, customers can access and pay for third-party products, services, get a wide variety of services within a one-stop shop. The most advanced are China's WeChat and Alipay. They combine messaging, social media, marketplaces, services. So super apps are also allowing other apps to plug into their ecosystem as mini apps. So basically, it's a scaled down version of a full native app. In Southeast Asia, two super apps have emerged from the leading rideshare platforms, Gojek and Grab. I think these are really interesting examples because you're seeing that they're really being innovative in the ways that they're helping consumers, offering services from food delivery all the way through medical device. And now they're both competing to help consumers select and purchase financial products. So in markets like Indonesia, there's a large majority of the population that are unbanked and lack access to basic banking infrastructure. So they've come up with some novel ways to tap into these customers, such as using their rideshare drivers as mobile bank tellers. So, you know, I find that really exciting. I mean, it's really interesting the way that some of these innovations are happening and how they're being able to serve previously unserved customers and start bringing them into the digital economy. You're also starting to see some early examples of this in the US, the most obvious being Uber, which has now added Uber Eats for food delivery. This all in turn is driving adoption of digital payments because consumers can link directly to their bank accounts for payment, bypassing traditional debit and credit cards in many instances. The move to digital wallets or electronic payments has also been fueled by the global pandemic. So, record number of consumers turned to digital channels to conduct business. That it really did change the way that consumers interact, the way that consumers do business. Many were forced to, quarantine, and so going online was one of the only ways that they could get access to the goods and services that they needed. A few examples of this, in India, digital payments increased 42% in 2020. And if you think about the size of the Indian population, that's just a massive growth there. In the US, you now see 1 in 4 small businesses reporting an increase in the use of contactless payments. And in LATAM, the digital wallet service, De Plata, saw 3 times growth over 2019, adding 3.4 million new customers by mid-2020. So just really tremendous growth here. Some of the drivers of that growth in digital payments, you're seeing a number of factors that are driving that growth. There's strong growth in mobile phone usage, specifically the growing dominance of smartphones. You also saw kind of an interesting phenomenon happen, especially in Asia, where there was a big explosion of consumers using smartphones that corresponded with the emergence of super apps and digital wallets. So I think that really created this environment where it really just exploded and you had a really wide adoption. This allowed emerging economies to leapfrog more traditional payment methods, such as credit and debit cards, that require more infrastructure in favor of digital wallets. It's not surprising then, when asked about how likely executives thought that payment cards would no longer be in use within the next 10 years, 75% of APAC executives found it likely. Interestingly, though, over 50% of all executives across the other regions also found it likely. Correspondingly, respondents were overall very positive about the potential impact of super apps on their organization's revenue over the next 5 years, with 76% of executives indicating that they thought the impact would be either somewhat or very positive. As you can see in the regional breakout, unsurprisingly, Asia and LATAM had the most positive views of potential impact on revenue. The results were a little more mixed for North America and for Europe and Africa. When respondents were asked about the top barriers super apps could pose to their organization, concerns were related to insufficient security, privacy, or fraud and regulation, or fraud. The other barrier that was in the top 2 there was regulatory limits on data sharing with third parties. This is definitely a major concern in regions such as the US and EU, where you're seeing new data privacy regulations, such as the GDPR and CCPA that have been rolled out. So that puts a greater onus on companies to protect consumers' data. So that's something that definitely going to have to think about with looking at kind of the long-term trajectory with adoption of super apps. Along with that, you're also seeing increasing noise from legislators about the possibility of anti-monopoly interventions against large tech giants that would be most likely to branch into the super app space. All right, so now that we've reviewed global adoption trends for super apps and digital wallets, let's take a look at some of the ways that these could disrupt the relationship between businesses and their consumers, and more importantly, what you can do to mitigate that. When executives were asked about the potential impact of super apps and digital wallets on their organization's revenue over the next 5 years, the vast majority responded that they expected the impact to be positive, with all represented industries coming in at 75% or higher. So, this was actually something that I was a bit surprised by. We broke this out by industry. I was expecting that you would see much less positivity within the consumer lending and credit card issuing space, and likely in the financial services space. So you do see a little bit of that, but Really, where you're seeing the least positivity is in healthcare and insurance, and telecommunications and e-commerce show the most positive views of potential impact on revenue. Many of these super apps include payment services within the app to facilitate transactions. Currently, most of these flow through traditional banking and card infrastructures, but we're already seeing moves by super apps to leverage the customer relationship to increase their footprint in the financial space. WeChat has launched WePay for payments and WeBank for, you guessed it, banking products. You also have Alibaba, which has launched Alipay for payments and Ant Financial for banking. So what this is doing is, that's putting them now in direct competition with banks and credit issuers. So, something definitely to think about if you're competing in this space. More broadly, super apps have also proven to be very adept at collecting and using customer data to create better and more targeted offerings. Additionally, such technologies are driving changes in consumer expectations in regards to the level of convenience and personalization that they expect with businesses. So whether you find yourself in the position of competing directly against super apps or needing to differentiate yourself within that ecosystem of the super app, being able to properly target and extend customized offerings that will resonate with your customers is going to be more important than ever. This is an area where TransUnion is able to help level the playing field, allowing you to tap into our industry-leading data, analytics, and consumer insights. TU owns and maintains over 1 billion consumer credit files worldwide, along with comprehensive public records data, trended data, and alternative data sources. This allows us to generate a deeper and more diversified view of the consumer identity, providing a credible baseline identity, which considers both online and offline transactions and behaviors, and uses both personal and device data to create that baseline identity. And of course, this is all in compliance with local legislations around the world. So, that's something that TransUnion takes very seriously, being a steward of the data that we manage and intake. All right. So another unique benefit that TU brings is being able to expand the pool of prime credit risk, allowing you to capture more new to credit and younger consumers without increasing your credit risk. By using trended and alternative data, so looking at beyond the credit report, TU has been able to uncover millions more creditworthy consumers worldwide, which is really exciting to me, being able to reach out to these unbanked or underserved communities that now can participate within the digital economy. We've been able to do this all while demonstrating that these consumers are prime credit risks. So very exciting. Taking that a step further, you can also leverage TU's unique data, analytics, and insights to create better and more personalized offerings. So this allows you to improve your audience segmentation and targeting, to connect with the right prospects that will respond to and qualify for your offerings. You can also leverage our insights to better refine your personalized offerings, making sure that they're going to appeal to your customers. By having a more complete picture of the consumer, you can deepen and ultimately retain that relationship over the long term. So we've taken a look at how super apps, digital wallets, and digital transformation overall are impacting the market. Now let's take a look at some of the risks that come along with this shift. As I mentioned earlier, the top 2 barriers that executives identified to super app adoption were concerns about security, privacy, or fraud. And the second one being regulatory limits on data sharing and third parties. It's interesting to note that the concerns related to security, privacy, or fraud was the top reported potential barrier to super app adoption in every region that we surveyed. It makes sense though, because once that trust is lost with consumers, it's very difficult to build that back. So as you're looking to optimize your digital transactions and deepen your engagements with consumers, whether that's just bringing offline activities online, you really need to understand the risk throughout the customer lifecycle and look at how you can protect against those risks. This is something that TU has been tracking really closely, especially as it relates to the acceleration of digital transformation during the global pandemic. So we've been conducting a global consumer survey since the beginning of the pandemic. One of the trends we've been tracking is an increase in digital COVID-19 consumer scams. In our March 2021 survey, 36% of respondents had either been targeted or fallen victim to a digital scam, with phishing scams being the major driver of this increase. So, that's something, we've definitely seen in our survey results, but we've also been hearing from a lot of our clients is that they're having to contend with this really big increase in phishing scams, which can cause a lot of downstream problems and cause a lot of risk within your organization. This also has led to a wave of breached credentials and stolen personal data that's being used to fuel other types of attacks. So we'll look at three categories of fraud where we're seeing some of these increases: true identity and synthetic fraud, payment fraud, which includes credit card fraud, and then account takeover. Interestingly, over the past year, we've seen a decline in synthetic identity fraud. So synthetic identity fraud, for those of you that might not be familiar, that is where a fraudster, they create a fictitious identity by piecing together real identity attributes and fake information with the intent of perpetrating fraud. So an example of that might be using my social security number, Joe Smith's address, and a brand new email address. They set up that identity. They often cultivate it, going out and opening new lines of credit and paying on them for months in order to increase their credit score. And then they go out and they make bigger purchases once they can get that credit limit raised. So interestingly, we had seen synthetic identity increasing for a number of years, but now we've seen kind of a flip there where we're seeing a decrease in synthetic identity fraud, but a 93% increase in true identity fraud. So that's also known as identity theft. So taking over a legitimate person's identity for the purposes of perpetrating fraud. So you might be asking yourselves, how does this relate back to super apps and digital wallets? Well, this is definitely an area where, it impacts the entire market, right? Whether you're looking at, just digital transformation, bringing those offline activities online, or working through a super app, using these stolen and synthetic identities, this allows fraudsters to go in and set up fraudulent lines of credit, go in and perpetrate application fraud. So really important to be able to protect against this type of fraud. Payment fraud. Interestingly here, we saw a decrease in credit card fraud reports compared to 2020. There's likely two driving factors here. One is the emergence of alternative payment methods, such as digital wallets. And the second is likely fraudsters are turning to more lucrative targets. Usually, with stolen credit cards, they can make a few payments before it hits chargebacks and gets shut down. Being able to take over an identity or being able to take over an account is a lot more lucrative for a fraudster. I thought it was interesting too, as we've seen the big explosion and adoption of digital wallets and electronic payments, you're also seeing, the use of credit cards go down, and we're seeing correspondingly that the reports of credit card fraud are going down. That's something that, businesses really need to consider too, as payments shift from credit cards to these digital payments, there's new types of risks that are introduced there. So really important to think through the risk within your payment process and how you can protect against those. We've also seen a 15% increase in reports of account takeover in the past year. Account takeover is when a bad actor gains access to a good user's account for the purposes of committing fraud. That could mean draining a checking account or making fraudulent purchases using stored payment credentials. I really do believe that we're going to see ATO continue to grow over the next couple of years as fraudsters continue to reap the benefits of all the exploited login credentials and personal data that you've seen on the dark web since 2020. Now, account takeover can be particularly costly to businesses, not just in revenue impacts, but also in terms of the damage to the customer relationship and reputational damage. Now, this is going to be it's going to open up some vulnerabilities with super apps because you're storing more payment information, you're storing more personal data in one place. So now the impacts of a possible breach, a possible account takeover become larger. So while storing payment information with a business or service brings convenience, it also creates vulnerabilities. Digital wallets are often tied to bank accounts or credit cards, and super apps are increasing the scope of their services, meaning that the damages can be even higher if an account is taken over. There are a number of measures that businesses can take to mitigate account takeover across all points of risk in the customer lifecycle. We'll go in a little more in depth with that in just a moment, but just to talk through some of the risk here with account takeover, it can be really difficult to prevent because there are multiple points of risk throughout the customer journey. At login, you have to protect against credential stuffing attacks where fraudsters purchase lists of breached credentials from the dark web and test them against your site or against your app to see if they can gain access. You also have to protect against consumers giving away their login credentials, either through a phishing scam or even romance scams. A really interesting case study we saw a few years ago was with one of the large telecom providers that we work with. They were finding that they were having a really big increase in account takeover, and they were able to trace it back to fraudsters were going to dating sites, ingratiating themselves with consumers, getting them to give them access to their account, saying, oh, if you let me have access to your account, I'll go and I'll get a new phone, I'll set up a line of service, and then we can talk all the time. So what they did here is they set up device-based authentication. So with that, when the consumer logs in, there's also a check done on their device to see if that device has been registered to the user's account. So that's one way that you can effectively shut down ATO, even if fraudsters have the correct login credentials. One of the other areas where we see account takeover attacks is account management. Here, fraudsters typically go in, they change key details such as email, phone number, or even ship to address so that they can intercept communications and shipments. Lastly, a weak point for many businesses is the contact center, where agents fall victim to social engineering scams. What this all really comes back to is digital transformation. So regardless of the channel, the world is changing and the ways that you interact with customers has to evolve. So whether that's leveraging super apps and digital wallets or moving offline activities online, launching an app, streamlining your online processes, to support all this, you really need tools to optimize that digital customer experience. This drives the need for strong identity proofing and fraud controls that will allow you to secure the entire customer lifecycle from onboarding to login to account management. We'll go into more detail here in just a moment, but really being able to take a layered approach is so important in being able to secure and optimize that digital experience while meeting the needs of your different customer segments. A great example was highlighted in some of the findings from the Economist Intelligence Unit survey. I thought this was a really interesting call out. 86% of executives indicated concerns about security features being built with older phones in mind, which could hinder their business in regards to lower income consumers who tend to use cheaper and older mobile phones. Protect all segments of your business. Smart devices offer more advanced security features such as facial scanning and the use of biometrics for functions such as authorizing payments or securing consumer accounts. But unfortunately, not all consumers have access to those technologies. So that really drives the need for businesses to take a layered approach to identity proofing, authentication, and fraud prevention to meet the needs of differing consumer demographics. Being able to layer on tools such as knowledge-based verification and document verification that don't require as much access to some of these newer technologies. All right, and as promised, we're going to walk through an example customer journey here. Obviously, this might look a little different depending on what your business is, but this kind of gives you a baseline understanding of where you might be able to, where you can identify different points of risk within your customer journey. So account origination, this is where, the customer first comes in, they're setting up an account, they're filling out pardon me, they're filling out an application. So here, some of the risk you might need to be protecting against are use of stolen identities, use of synthetic identities. So a number of those things that we talked about, some of those increasing risk we're seeing there. You want to make sure that you don't allow those bad actors to get into, get an account set up, get into your business in the first place. Also here, you want to be able to have a high level of trust that the consumer is who they say they are. So a number of different methods that you can use to verify the identity of that consumer. You can look at identity verification, document verification. So a number of different ways that you can look at that. One of the other things here at account origination that you really need to think about is how you can streamline that onboarding process. Consumers have very little tolerance for friction. As we've been seeing with some of these super apps, they're really raising the bar as far as what consumers expect for that customer experience. So being able to create that streamlined, seamless experience is so important there. At login, this is where you're going to be protecting against account takeover or even unauthorized access. Now, this is something depending on the environment you're in, if it's a super app, they might be controlling the login flow. If that's the case, you might want to look at where you can put in checks at other points in the customer journey to ensure that if a bad actor does gain access to a consumer's account, that they're not able to do more damage once they get in. So here at login, number of different methods you can use for authentication. Here you might want to think about, like as we talked about before with account takeover, a lot of times fraudsters, they have the correct login credentials, either through breaches or through phishing scams, getting consumers to give them their login credentials or romance scams. So being able to do an additional check to see, is this a good device that is linked to this consumer's account? That gives you a much higher level of assurance that that is a good transaction. Account management, we talked about this before. This is, another risk point for account takeover. Here are a number of checks that you can deploy to mitigate that risk. You can do email checks, verify that any change to an email address is valid. You can do phone checks. Adding in device checks is another great thing to do here. You can look for any kind of risky behavior, such as a mismatch between stated IP address and real IP address. If you see the device says it's coming from the United Kingdom, but you can see that the IP address is really coming out of Russia, that's something that you might want to follow up on. Transactions, this could be anything from, funds transfers to allowing a customer to set up a new line of credit. Again, here you're going to want to have some type of checks in place. That could be adding a second factor of authentication, so setting up one-time passcodes or knowledge-based verification, or maybe if it's a lower risk transaction, simply doing a device check in the background to make sure that there's no types of risks there. The other great thing with being able to do that device check is you can look and see if there's a history of fraud associated with that device. So if you can see that the device has been associated with past account takeover, past application fraud, that's probably not somebody that you want to allow to continue a transaction. Lastly, payments. I think this is going to be a really important one going forward, especially as you consider how you interact with digital wallets and super apps. This might be kind of like your last point in the journey where you can really put in some protections and ensure that you're protecting your business and you're protecting your consumers. So being able to do fraud checks, look to see, is there any past history? Are there unusual velocities? If that device has been used to make 100 transactions that day, that's not a normal consumer behavior, and you probably want to look into that. You can also add in additional authentication checks here. So, if it's a large dollar transaction, or it's an item that's commonly hit by fraudsters, then you can add a second check, such as being able to do a device check or sending a one-time passcode to verify that this consumer is who they say they are. So really kind of thinking through that entire flow, I think this is a really great exercise for any business to do, really kind of considering what is your customer journey, what are your points of risk throughout the customer journey, and what can you do to mitigate those risks. And you might also need to think through, like we talked earlier with the disparities in technology, being able to provide multiple layers and multiple options for consumers to be able to verify and validate that they are a good transaction. All right, so that concludes the webinar portion of this broadcast. If you haven't already, make sure you download the report, New Dimensions of Change, Building Trust in a Digital Consumer Landscape. That'll give you the full survey results. There's also some regional reports which give a little more insight into specific trends and impacts that we're seeing within different regions around the globe. So with that, I think we have some time for questions here. I hope you picked up some good information. I'm going to go ahead and pull up our questions and we'll see what we have time for here. All right, first question. You mentioned that you've seen credit card fraud decrease. Do you think that's due to the rise in digital payments? Absolutely. I think, that's something that, you're seeing a couple of factors. Definitely the increase in digital payments. You're seeing that, that's something that's a lot more convenient for consumers, especially in some of these emerging economies. The growth there has just really been explosive, as we talked about earlier. So that's driving down the use of credit cards in some regions. I think you're also seeing too, though, that fraudsters are just turning to easier targets or more lucrative targets. And I think that corresponds with what we saw in the really large increase in true identity fraud, 93% increase there, and also the pretty big increase that we saw in account takeover. All right, next question here. You mentioned that 86% of executives believe the use of older phones by consumers hinders security. How can businesses account for that in their account protection? Yeah, this is almost my pet project. I definitely believe that it's so important for businesses to have a really layered approach to account security, to identity verification, because of this exact reasons. Being able to, say, for example, meet the needs for older generations who maybe aren't as comfortable with technology. I know my dad, he still uses a flip phone. So you definitely couldn't, push him an authorization request on his phone and expect that to be successful. So, being able to, offer those types of protections for younger or more tech savvy consumers, as we're evolving our strategies to account for protecting accounts, protecting consumers, but also thinking about, what are some of those lower tech options that you can offer, such as one-time passcodes or knowledge-based verification that's going to allow you to meet the needs for different customer segments. Another good example of that is like document verification, being able to streamline and automate some of those low touch types of identity authentication that's going to make it a lot easier for consumers and going to provide a greater level of protection for your business. All right, next question. How can you protect against phishing scams? I get this question so often, and it's such a tricky one. Because really your weak link there is your consumer. So how do you protect against your consumer being the weak link in that chain? I think part of that is education. Letting consumers know, hey, we are never going to send you a link to go in and change your password. We're never going to send you an email or where we're asking you to send us personal data. So I think there is an education component that needs to happen there. But even with that, you're still always going to have consumers that fall prey to these types of scams, these types of attacks. So I think it's really about having those protections downstream. How can you assure that even if a consumer falls prey to some of these types of scams, that their account is still protected? So being able to layer in additional modes of authentication, being able to do checks on the device to see, one, is there a history of fraud associated with this device? And two, is this device authorized to have access to this account? So, definitely you need to look at your points of risk, depending on your business. But I think really it's going to be about protecting downstream where you can. Okay, and I think we have time for one more question here. We've seen a rise in credential stuffing attacks associated with account takeover. What are some of the ways that you can combat such attacks? Yeah, again, this is really difficult. We've actually seen in talking to some of our customers, they've seen like denial of service attacks against their site, and then fraudsters, they go in while they're distracted dealing with the main attack and take over accounts. You also see credential stuffing attacks associated with account takeover pretty often, where they go and they just test out as many credentials against your site as possible or against your app as possible and see what sticks and see what accounts they can get access to. There's definitely some technologies out there that can, alert you to those types of activities going on with credential stuffing attacks. I think too, also just having robust controls in place to prevent account takeover at other points in the journey. Account management is definitely a key one that we talked about before. Being able to verify emails, being able to look at the device that's requesting those changes. Those are all great ways where you can detect that fraud before it's successful. I think the other point to think about there too is that fraudsters really move to the weakest link in the chain. So what we've seen with some of our clients is that as they shore up their protections against account takeover, say at login, they then see that fraud move to the contact center. So fraudsters going in using information that they've gained from data breaches, or even information that they can glean from social media accounts, using those little bits of information to then socially engineer contact agents and get access to an account. So as you're looking at this, as you're looking at how you protect against those points of risk, it's also important to think about where could that shift your risk in the business. And that's why I think it's really important to take that kind of holistic view of the customer journey to see what those points of risk are and how you can protect. All right, so that's all the questions that we have time for right now. If you had a question that you sent through that we didn't get to, do not worry. We will follow up with you after the webinar. Make sure you get an answer to your question. I want to take this opportunity to thank everybody for attending. Your time is valuable and we appreciate that. If you haven't already, download the report, New Dimensions of Change, Building Trust in a Digital Consumer Landscape, to get those complete survey results. On behalf of TransUnion, thank you, and I hope everybody has a great day.